Hi YouTube, please give me a moment while I connect Facebook. We'll be getting started shortly. And I think we should be live on Facebook. Hi everybody. Welcome to our weekly broadcast. I am Sami Absad, Director of Education at T3 Live. Hope you're doing well. Hope you had a great weekend. We're going to talk about the market. We're going to talk about some swing ideas for the week. But before we start, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss is for educational purposes only. Also, if you're new to our channel, please be sure to download the free ebook. Link for that is in the description. But without further ado, let's turn to the charts and get started. If you find benefit in today's video, I would appreciate it if you hit the like button. If you have any questions, let us know. Send us an email, info@t3live.com, or leave us a comment in the comment section below. All right, so here we go. It looks like the market bottomed, right, on Wednesday, and we're consolidating in the upper half. Let's call it the upper half of that wide range green bars in the upper half of that bars range. And if you look at the hourly chart, this is the hourly chart of the IWM, but if you look at the Qs is stronger. SPY is the same as the Qs. The Qs is actually a little bit stronger probably. They all have a 20 MA, this is the blue line, that started to curl and point up. That's a sign that we're higher, okay, that we're higher. And in terms of how much more upside do we have, well, we really only have to about the Wednesday's bars high. So that would be about 548 on the SPY, about 560 something on the Qs, and the IWM has the most room because it's lagging. So the IWM would be about 192 or so. So to me, the market looks higher. Is it a pretty picture? Does it look really pretty? No, it doesn't. And the biggest problem for me is not so much the direction, is that it's more so the fact that it's not pretty, and the fact that we have more resistance above. Like, okay, let's say we get to didn't I say 490? No, on the Qs it's 467. On the SPY it's 590. 592. Is that right? Or am I making this up? No, I'm sorry. I'm mixing things up here. It's the IWM that's 192. So whatever the prior bar's high, that Wednesday's high is, that would be my target on the Qs. But let's say we get to it, and then what? Then we have all that resistance to deal with. So I feel like it's not going to be really easy going. It's not going to be smooth sailing, so to speak, in the market. It's going to be a lot of back and forth, probably once and if we get to the prior highs. And if we start to trade above, it's going to be probably pretty choppy. The good news is earnings season has officially started on Friday when JPM reported, which is the first Dow component to report earnings every quarter. So we don't need the market so much because we will have the earnings gaps to 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 trade. So we're not going to need the market. But for me, I'm bullish on the market. I'm bullish until proven otherwise. Proven otherwise would mean, the failure of that hourly buy setup. If we fail on that hourly buy setup, there's something wrong with the mouse that I'm using. I'm not sure what's going on, but if we fail on the pivot on the Qs, the SPY, the IWM, then I'm wrong. Then I was wrong about the market. Then we're not higher, we're lower. So that's kind of the line in the sand. We should not break that pivot that formed on the hourly chart. So that's the SPY. Here's the Qs. It's the same. That's exactly the same. Here's the SPY, right? Identical. IWM, it would be this bar's high right here, which is 177. Call it 177. So if we break under it, then I was wrong about the market, and the market is still lower. But for the time being, I have turned bullish. So with that in mind, here's some bullish ideas. We got the AGL, which was already bullish prior to the gap. It was not following through to the downside at all. It was not going with the market at all. And then it popped. Has a base, so it looks higher to me over the base. It's not a pretty picture, but over the base, stop below it. Okay? BABA looks actually better. This looks pretty, but it's not a tight stop. So it would be over about 110 with a stop. It's not too big, 101. So over 110 by 101. So the red bar's high is, above it would be the entry. It looks like 109 actually. So it should be 109 with a stop under 101 and some change. This bar's high, 101.37 on the BA. Also, the yen looks higher, but the yen is too late. That's why it's not on my list, because it should have already triggered. What's on my list is the BABA and the CWEB from the China stocks. CWEB also looks higher over the base here. Stop, maybe the tighter stop would be 29.67. So I would just do it over this bar's high, 32.60 it looks like, with a stop under this bar's low, 29. I said 29.67. See, there's something wrong with my mouse. 29.67, yeah, on the CWEB stop. I know what you're thinking. Some of you think, doesn't he know about the tariffs on China? Is he crazy? I'm not crazy, and I do know about the tariffs on China. I just stay in my lane, and my lane is the charts, right? That's my expertise. If the charts say higher, I'm just gonna ignore the news for the most part, and I'm just gonna follow the chart, follow the money. CELH looks pretty good over the base. I like it higher. Tightest stop would be under 35.44. Wider stop would be under this bar's low, 32.94. So it's up to you what you want to use if you decide to play it, whether to go with the tight stop and treat it like a 1, 2, 3, 4 play. So the igniting bar, 2 resting bars, and if it takes out the highs of these bars, that would complete the 1, 2, 3, 4 pattern with a stop under 35.44 or a wider stop under 32.90. CHWY is really bullish. This reminds me of the Groupon, which I called in the newsletter on Friday, and it popped pretty nice. Very bullish. So this is not on the list because it already triggered. It's too late. But CHWY, I'm not in it, and I'm looking to get in it on the next pullback because this has got to be a weekly buy setup. Yeah, sort of a weekly buy setup. So I'd like to see it pop and then give me another pullback. Looks really good. I'm not sure about the CRL. Down a lot with a reversal bar. So long over 101.40 by 91.86. That's actually a tight stop for this stock, for the CRL. So I'm not sure about it. One can argue it's climactic. One can argue, no, it's not climactic because it put in a big green bar this day that got negated. So if we didn't have the green bar and we had this big red bar forming after this red bar, then it would have been perfect. But I'm not as sure about it because of the bear sandwich here, right? The bears made a sandwich out of the bulls. IVR and a lot of these mortgage REITs and real estate stocks, they look like they could rally for a couple days, down a lot, a little bit climactic. I think I don't know if I have them on the list. I guess I don't, but there's a few of these. AGNC is another one, down a lot, a little bit vertical, climactic. LW is different, but looks pretty. Long over that bar's high. Again, there's something wrong with this stupid mouse that I'm using, and this is the first time I'm using it on, it's one of those, what do you call it? Trackball mouse. So, but it doesn't matter. There's something wrong with it. It's over 55.50, stop under the red bar's low, which is 52.80. It's a daily buy setup on the LW. NEOG put in a gap for the most part novice, got sold, then got bought, and now has a breakout over the base, stop right here, which is 531. So over 577 by 531, target up here, okay? On the NEOG. ORC, that's another real estate or mortgage REIT, I think, just like the IVR. It looks a little bit better probably, more climactic to the downside. So long over the green bar's high, stop below it. Just long above it, stop below. So it'd be over 616 by 585. StoneCo or STNE has been really bullish. So I'm impressed a little bit with the bullishness. That's pretty nice on the weekly chart. Let's take a look at the monthly. Okay, the monthly is not as good. But again, interesting bullishness the last few days, last week basically. Over the highs, don't see a great entry, but we'll be watching it. Tesla does have a decent entry. Long right here, entry over 257.75. stop under 241.36. One can also try the TSLL, which is cheaper and has 2 times the leverage of Tesla. So it would be long over this bar's high, 278, let's say over 281, stop under 750 or 770. So that's Tesla, but leverage Tesla. And then TWLO doesn't have an entry yet, maybe off the hourly chart, but what I like about the TWLO is the monthly chart. Down 3 red bars in a row into a great area to buy, which is the 20 MA and the minor support. The top of that pivot, what was resistance in an uptrend becomes support on a pullback. So this is in a really good area to buy it. The shorts, I only have 2, so don't have a whole lot. The COMM, which the longer it bases, the better it becomes. As you can see, we broke out, just like the market did, and then this one retraced all the way back down. So the longer it bases, the more likely it is to break down lower, and this will be viewed as a breakout failure. If you were to look at it on the weekly chart, it's going to be 1, 2, 3. But I'm hoping it bases for the next couple days and then short under the lows, stop above, okay? On the COMM. Wolf, I think, is a little bit late. Should have done it already when I thought about doing it under the double bottom. Hasn't really gone that far, so it should have been under 232. Stop over 281, 289. Now probably under 206 by 289. So not great. I don't have very many good shorts, as you can see, just 2, and that probably is a good indicator of what the market is up to right now, meaning that the fact that the market is bullish right now. So we'll see. I haven't looked at the futures. I don't even know if we're up or down in the post market, but we'll find out tomorrow. I hope you enjoyed today's video, and I wish you the best of luck with your trading this week. I'm Sami Absad with T3 Live. I will see you on the next video. Take care, everybody. Bye-bye.